Hi everybody, how you doing? It's Bruce here with Stock Markets with Bruce. Good morning, one and all. It's June the 22nd, 2021, and it's been a busy morning here already. Lots going on. Interesting things coming to the surface here in the last few hours. We are into what could be a very busy day today and a most interesting few days ahead. On GameStop, the big news this morning broke a couple hours ago. The company officially announced in a press release that they have sold 5 million shares. We've been asking and wondering about this exact topic now for what 2 weeks, ever since the annual meeting. When will the 5 million shares be sold? At what price will they be sold at? How much money will they raise? Well, we finally have the answer. They've raised $1.12 billion after expenses and commissions. It sounds like $224 a share was the price for the stock. That's what the price it had to be sold at on average to net out this 1.12 net billion dollars. Add that to the money they have on hand, which is almost 800 million. You got a company with 1.8, 1.9 billion in cash and no debt against it. Very strong financial position. This is probably, I would say, in the history of GameStop's existence, this would be the strongest position they've ever had. Do you think I should hold VGAC turn 23andMe? Yes, I think you should. I think you should hang on to 23andMe. Richard Branson put this deal together with all these associates and all of these others very smart and very wealthy people. This stock at $11.81 is not done yet. It's the fourth day of being a public company. This stock should be grabbed up. You should be grabbing this stock with any proceeds from call options you can get. Buy up this stock, buy contracts in this stock, option contracts for next January. This thing is going so much higher. You have no idea. You don't seem to have, in some cases, you don't seem to have the idea how wealthy these people are, how well connected they are globally, and they are not going to just take the stock in 2 days and run it to $80 a share. They're not going to do that. They don't want to be investigated by the SEC for manipulation. They don't need to do that with this company. They will allow this company to now mature in and settle into becoming a publicly traded firm. Every 13 weeks, they come up with earnings reports now. These are quarterly financials. They will hold shareholder promotional meetings. They will have investor days. They will bring the media in to show them what they're doing. This is day 3 of the listing. We just got started. Sit tight. Enjoy the ride, because it's going to be a great ride. On all of these SPACs that I've talked about, the same thing is going to happen, irregardless of what they're doing right now. Forget about what they're doing right now. Don't let it get you down. You're not here for a week. You're here for 6 months. You're here for a year. You're here for longer to get a return that you deserve on these ground floor investments like SOFI and ATI Physical Therapy, Gores Holdings, 23andMe, Fifth Wall Acquisition, Vector Acquisition, Navsite, Starboard. These are gifts being handed to you at the ground floor level of these companies' existence. You are not going in at $150 a share. You're in at 10. You will do very, very well. Just give it the time. Give it the time to give you a wonderful return on your money. Bloomberg article read GameStop indicates the stock sales were through Jefferies. Jefferies is the official brokerage house of GameStop. This means block sales to funds, institutional investors. Correct. It could have been that all along. It could well have been that for the last week and a half, Jefferies has been piecing off chunks of this 5 million block, piece by piece by piece, on a deal basis. They could have sold them chunks by chunks a week ago. In the 225, 230 neighborhood. They could have sold stock 3 days ago in the 215, 2022 neighborhood. The average price, 224 for all 5 million shares. It's a done deal. It's over. It's locked in. Jefferies made a nice commission on the deal. Institutional investors around the world are sitting on chunks of GameStop, and the stock is now $211 a share at this moment in time. The buyers of this stock are saying to you and to me and anyone else who will listen, Here's $1 billion, 1.1 billion bucks. We'll give you a couple of years. See what you can do with it. We got time. We're not in a hurry for a flip. These shares are not for sale today. They're not going to be flipped out. They're out there for a long time. Sure, if the shares were to go to 300 this afternoon or 400 tomorrow, yeah, they'll sell some of it, of course. But this stock is not for sale for a quick $10 trade, $20 trade, or anything like that. This stock is put away for a while. So yeah, this company is building a larger following of shareholders and shareholders with money. I'm looking for this company to attract small investors, more of them, millions more. That's what I'm curious about. The 240 million gamers out there, hey, if all 240 million gamers tried to buy one share of this stock, that would be 240 million shares of buying coming into a company with 76 million shares outstanding. Guess what would happen to the price of this stock? It wouldn't be anywhere under $1,000 a share, obviously. Expecting 240 million gamers to buy a share each, it would be a little rich. But, if a million of them, 1/240th of that number, 1 million of the gamers out there were to try to buy 1 to 10 or 100 shares each of this stock, this thing will triple in price. So yeah, it wouldn't take much. It really wouldn't take much. Thanks for the SOFI opinion on the short attack. What are your thoughts on 23andMe being low? If the founders are looking to make money, wouldn't they be getting ready? Yeah, it'll come. They're patient people. They don't need to promote it in 5 minutes. They're billionaires already. Like they're already rich. This isn't like the first deal they've ever done and they're really looking for it to pop right this second. They're rich already and they have deep pockets and deep connections, and they will build a very wide base of support for this stock. And you can bet that anyone who knows these people personally are buying up this stock quietly and systematically. It's only down a dime right now at 11.62. 23andMe is going to be massive, massive. So will SOFI. Pick your stock. 1504 on Gore's Holdings, up 78 cents. Kids, they're all going up right now. GameStop, 223. ATP, up 14 cents to 922. Gore's, up 77 cents to 1503. ME is coming up to break even. It's happening. There are Gore calls for 10 at 560 for January. $10 calls, $5.60. My math says that's less than 80 cents more than the current price. Is that how it works? It seems like a no-brainer. Yes, if you buy $10 calls on Gore's, you're in the money, $5 a share right now. So yes, at 560, that is a very low premium to pay. I agree. And if you're getting one, that means you have 100 shares. And if the shares go to $20, then this call will be worth $10 book value plus a little bit of premium. They'll probably be worth 20, 21, maybe $11 a piece. So you'll be close to double your money. If the shares go to 25 anytime between now and January, they will be worth $15 a share book value. That's a triple of your money. So yes, that's the leverage of these calls. If you're looking at buying 1250s, they'll cost you more, but they'll have less book value. They'll cost you less, but they'll have less book value. If you buy 15s, there's very little book value, but you might be able to buy more of them to have more leverage. It's a question you have to ask yourself, which way do you want to go? Would you consider writing a GameStop contract today or wait a bit until it reaches a higher high? Look, as I was saying first thing this morning, you got to wait for this stock to settle itself out, figure out what it's doing. The street is figuring out as the minutes go by. More and more people are figuring out, you know what? The guys at GameStop raised $1.1 billion at $224. This stuff's only $219 a share. We could buy it for less than these other investors are paying for $1 billion of this stuff. Think about that. There are investors out there to put $1 billion into this company at $224 a share. It's a $219. Hello. This should be at $260, $270, $280 on that reaction. It hasn't happened yet. There is a bow being pulled back here. I would wait a little bit, let the stock do a little bit of a run, maybe to get to the 230, 240, 250 level. then take a look at 300s, 350s, 400s, 450s, 500s, depending on how long you want to write the contract. You haven't written a contract yet. When you write a contract, you collect the premium now or at expiration. You get the premium right now. It's like short selling. You get the money now, and you can do whatever you want with the cash. You don't have to keep it in the account. You can take it out. You can buy other stuff with it. You're just now obligated to either hold the contract till it expires, and hopefully that's worthless, or you're obligated to that your shares could be called from you, hence the term call option. Your shares could be called from you at the exercise price you've set, which means a bunch of cash shows up in your account. Now you can do whatever you want. You can buy the stock right back that you just had sold from you. You could buy them back and rewrite new calls because the old call's gone now. Or the third option is you could buy the call contract back. So if the shares drop and or stay here, but the contract slumps in value because it's expiring not too long from now, it will decrease in value. You can buy it back for the lower price. Pocket the difference, and you're off the hook. And you can write a new contract whenever you want, for whatever strike you want, for whatever length you want, again, whenever you want. So if you're writing 1 month contracts, 3 months into the month, that contract has dropped 3/4 of its value, you could just buy it back whenever, all of them back, and turn around and write a new 1 month contract again, 3 weeks, it has three more weeks of life to it at a higher price. So you buy this one back at 1/4 of the price you sold it for, sold another one at the high price, again, at the new 100% price, in order to get ready to buy it back when it slumps. You can do this again and again and again and again all the time. I am still working through these call and also waiting for the classes. When I go to do the call, do I do a covered call or just a regular call? I tried to read through each, but it's still unclear. Ride side by side, right? I don't know what it is you want to do. I don't know what it is you're trying to do. I'm not sure if you're trying to buy a call option because you want to buy a call option for the upside of the stock's run on one of these SPACs, or are you talking about GameStop here? Or are you talking about Gores Holdings? So are you talking about buying a Gores Holdings call contract because you believe the shares will go up nicely in value like I do, and you want to make a gain on a call option? If that is what you're thinking, then you're looking to buy to open. That's your first transaction. You're buying to open a position so that you are buying a call option on Gores Holdings for January at least. But which one? You might be buying a $7.50, a $10, a $12.50, or a $15. I don't know which one you're interested in. Each one has a different price. The lower the value of the call, the lower the strike price, the more expensive they are because they are in the money. If you could buy a $15 Gore holding option, you are buying a contract that is basically at the money. The stock's $14.74. I'm just rounding it up to $15. You're buying a $15 call option. That option, whatever you're paying for it, is all-time premium only, which you will not get back if the stock is at $15 by January next year. But if the stock is at $25 by January next year, then the call will be worth at least $10. If the stock's at $30, that $15 call will be worth $15. If the stock's at $45 a share, the $15 call option will be worth $30 a share. Times 100 shares, $3,000 a contract. Right now, if the call is they're asking $3 or $4 or $5 for it, that's extremely expensive. It's too much to be paying for a call option of a $15 contract. If you can buy a $12.50 call or a $10 call, you might be way better off. In that, the $10 call is worth right now $4.82 a contract because the stock's at $14.82. Take away the $10 call contract price, $4.82. So the call option value, actual value of the contract is $4.82, but it's not trading at $4.82. It's offered at $5 or $6, something like that or more, time premium on top of that, because it's good until next January. People will pay a premium to get that contract because they have all this time on their hands to enjoy an up move on the stock. If you have a $10 call on Gores and the stock goes to $20, that $10 call is worth $10. The difference between 20 stock price and the price of the contract, the exercise price of the contract. It's a $10 call. If you could buy it for $5.50 and it's worth $10, you've almost made double your money. If the stock goes to $30 a share, anytime between now and January, you've got a $20 call contract. You paid $5 something, you've almost made 400% on your money. You just got to wait out. You'll just sell the call for that $2,000 at that time. Once the shares reach that level, you can just sell the call back into the call market, and you've got the difference. You now have $2,000 coming back with the $500 having gone out. You're up $1,500. Nice. I hope this works. Hope people are understanding this. I hope I'm not losing you on this. Classes are coming, and it'll be a lot more fun. Thank you, everybody, for that. If you'd like to talk to me about a 1-hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.